Real Estate Show with Pat Lopez, where we talk everything real estate. So for this show, we're going to talk about interest rates. The Fed cut rates, but hey, interest rates are going up. What is going on? And the second thing I'm going to talk about is Zillow. They came out with their housing trends for 2024. We're going to do a deep dive, look at some of those numbers, some really interesting numbers that they came up with about who's buying houses, ages, medium incomes, all that kind of thing. So let's jump into the interest rate part. Now, the Fed on September 18th, they cut interest rates by 0.5%. Okay, so the Fed fund rate went from 5.25 to 4.75, and there is a little bit of a range, but it went down 0.5%. Now, interest rates were in the low sixes, high fives back in September 17th and 18th. And now all of a sudden, interest rates popped up. Why? Well, the jobs numbers came out on October 4th, and they came in 100,000 plus jobs more than the experts anticipated, which caused the interest rates to jump. Now, you may say, well, why would interest rates jump when the Fed's cutting rate? Well, the Fed cuts the federal funds rate. What banks borrow money overnight, from the Fed, the money that they get. It's a little bit different than what the interest rates are. Interest rates for mortgages and, cars and things like that are a little bit different. And if you have like a car or shorter term interest rates, they're more impacted by what the Fed does than what the 30-year fixed loan is. And because that's more mortgage-backed securities or mortgage bonds. So because these jobs number came in a little bit hotter, boom, interest rates pop. And I'm talking about going from the low sixes, 6%, now up to the high sixes, 6.6, 6.75, somewhere in that range. And once again, that all depends on down payment, credit scores. If you're buying a single family house, you're moving in. I mean, there's a bunch of variables. That's called loan level pricing adjustments. But, that is a range of what you're looking at as far as rates. And that's a big shock. And here's a story for you that I was talking to an agent that had a buyer ready to put an offer on their house up in Bucks County. And all of a sudden, they were pre-approved at that 6% range. And now they're being told that their interest rate is 6.875. Well, all they did was went shopping for the past 2 or 3 weeks, and there was that massive difference in interest rate. And now the agent is calling me, asking me, hey, is this true? Did the interest rates really, pop up? And yeah, the jobs number came in and 100% interest rates went up. Now, we don't know all the specifics, credit scores, down payments and all that. So, her, interest rate could be a little bit lower, could be a little bit higher depending on those factors. But just anecdotally, now she is on the sideline. She says, hey, until these rates come down, I don't feel comfortable affording that house. So that's something that you really need to think of. And being an agent, you really need to be a student and understand what's going on in the market, what impacts, and have these conversations with your buyers and your sellers as well, because your sellers may be looking to buy a home and they're really interest rate sensitive as well. Okay, so now let's jump into the Zillow report for 2024. Now, Zillow came out for 2024. The median age for a buyer is 42 years old. Median age, 42 years old for a buyer. Also, the breakdown in percentages of buyers per, by generation. So Gen Z, that's 18 to 29, that's 21% of the buyers out there are from Gen Z, 18 to 29. Also, we have millennials, 30 to 44 years old, they are 34%. The biggest number right there, 34%, are the millennials. Gen X, they're 44 to 59. They are 25% of the buyers. And baby boomers are 60 to 79 years old. They're 19% of buyers. So that's the breakdown, per generation. And once again, that 42 is your median age of a buyer today. Now, incomes. What is the share of buyers' household incomes? Okay, so if you're making less than $50,000, there's 26% of the buyers are making under $50,000. We also have in between $50,000 to $100,000. That is 26% percent of the buyers making that amount of money. We also have from 100 to 200,000. That number is 31%. 31% of buyers are making in that range, and then 200,000 and more is 15% are making 200,000 and more. Okay, so that is the range, the purchasing range of household incomes. Okay, so now let's look at regions. Okay, and this is where are more houses being sold. Okay, so if we look in the South, 43% of all sales nationwide are happening in the South. That's 43%. Out in the West, we have 21%. In the Midwest, 23%. And in the Northeast, where we're at in the Northeast, 13%. And that makes sense because a lot of the construction that's going on is going down, down south in the Midwest. Up in the Northeast, there's not a lot of land. There's not a lot of new construction going on. Inventory's tight. So the sales are down, and that is the lowest region. 13% of all sales nationwide are happening in the Northeast. Okay. Shares of buyers in relationships, like whether you're a single person, you're married, or have a partner, two people buying, or if you're, divorced, single, widower, that kind of thing. So 24% of buyers out there are not married, single, individual people buying a home. The biggest group is 60%, and that's married or a couple or a partner. Okay, and that makes sense because if we look at the median price to buy a home in the Philadelphia area, you need to make $93,000. So if you have a husband, wife, boyfriend, girlfriend, whatever the case may be, and you both make $50,000, well, yeah, you can afford to buy that median house. But just an individual making 93, there's a lot less of those people making that amount of money. So that does make sense. And then single people or divorced, separated, that is your 15% right there. So now, the first-time home buyers, this was, kind of interesting. What is the percentage of buyers that are first-time home buyers? So if we turn around and we look at 2018, that was 46% of buyers were first-time home buyers. In 2019, that was 45%. In 2020, that was 43%. 2021, which sort of makes sense here, was 37%. And 2022, 45% of buyers were first-time home buyers. 2023, 50% of all buyers were first-time home buyers. And so far this year, 44% of all buyers are first-time home buyers. Now, why did I say 2021? Sort of makes sense that was the lowest amount because every other year we're talking about 40% plus. Well, in 2021, people were competing for homes. There was multiple offers for homes, and the market was really, really crazy, which really squeezed out that first-time home buyer. So that 100% makes sense. Now, for down payments, 52% of people buying homes today are putting 20% down or more. So that means that 48% aren't. But pretty large number, 52%, 20% down or more. Down payment assistance. Okay, these are people who are generally first-time home buyers, and they are getting help from a nonprofit, a charity, a state bond program. They're getting, money, DPA, down payment assistance. 60% of all first-time home buyers are getting DPA, down payment assistance. So if you're dealing with first-time home buyers, you really need to understand down payment assistance programs and understand that there's money out there. You don't have to be an expert on, how the programs work. You just need to understand that there is money out there. And it's sort of ebb and flows because sometimes there's more money out, there's several grants or closing cost assistance or, whatever you want to call it, whether you have to pay it back or if it's a true grant. So there's always programs coming and going. Okay, so now, what was the most important thing, for a buyer when it came to buying a house? And I thought this was kind of funny, that's why I'll mention it, is 83% said the most important thing was to have air conditioning. Okay, 83% air conditioning, and then 79% was buy within their budget. And if you go onto the report, you'll see there's a bunch of different things on there as well, of other things that were important. But most important, air conditioning. Pretty funny, right? Okay, the last thing we're going to touch upon is equity in homes, okay? So if we go back 66 years, we're talking about since 1953, right now, more people who own homes have more equity than over the past 66 years. You have to go back to 1958, where more people had more equity. And we're talking about over 70% equity. So if you take everybody who owns homes, because there are a lot of people that own their homes free and clear, some of the new people who are buying today may put 5, 10, 20% down. But when you put everybody that owns a home, and you average everything out, 70% equity are in those homes. Hasn't been that way since 1958 or 66 years ago. And that sort of makes sense too, because if we turn around and we look, just this last 4 years, homes appreciated, 30, 40, 50%. So there was a huge appreciation in these last couple of years, which means, hey, if you bought a house 4 or 5 years ago, you're sitting on, a pile of gold right there, right? So hope you enjoyed some of these statistics. I hope you enjoyed the Real Estate Show. Be sure to follow the show on Facebook and Instagram, and be sure to subscribe. We have some really good guests. I have a couple really good guests lined up for you that are going to be coming on the show. And also, leave a comment. Tell me some show topics you'd like me to cover in the future. Okay? Hope you enjoyed the show. I'll see you next week. Remember, this show is everything real estate. Talk to you soon.